Sponsored by Centavos. Keep more of your money.
Welcome back to Ask Sloan. I'm Sloan.
I'm Ben.
And we're going to follow up from last episode where we were talking about how to form a business. If you missed it, you need to go back and check it out. We did a little negotiation. Ben is now my partner in this podcast venture, and we're going to be setting up our company. So we're going to tell you a couple little pointers. We reviewed some of this last episode, but I'm just going to kind of knock it out real quick. You need to get out a pen and paper if you want to take notes and write this down. It's not difficult, but you are going to have questions, okay? So the first thing, and this is a major thing, this is also going to be a tip that we provide you at the end of the show. If it's you and a partner, or if it's just you by yourself, you want to set up a manager-managed LLC, okay? There's only two options, a manager-managed LLC and a member-managed LLC, and you're going to be a member. You're also going to be the manager, but if you have a manager-managed LLC, later you can implement a manager, and then the member has less liability. It's pretty complex, and this is not legal advice. So if you really want to understand all the details on that, go get some counsel from an attorney and ask him why, and he'll give you all those little specific details. But you want a manager-managed LLC. And here's what you need to know. You need to know what's the name. Now, guess what?
Name of your business?
The name of your business. You got to have a name of a business, right?
Okay.
Now, check this out. You're not the first person to start a business, okay? So you might want like 2 or 3 names because there are a bunch of businesses out there by a bunch of names. And if you get something like generic, like M&M Company, it is probably already taken, okay? So come up with a couple of names. And then you can always have like a company like my company. The first company I ever made is Ryan M. Sloan Incorporated, right?
Okay.
So there's not too many Ryan M. Sloans out there, and nobody incorporated it in the state of Texas except for me. And so that's my company.
So real quick, do you pick the names and then you enter one name and then it tells you that you can't use that name? So put in another one?
Really what you need to do is you need to go and you need to search for the business name at your Secretary of State or at your comptroller, depending on what state that you're in, and kind of see if there are any other companies that have that name.
Okay.
And then if you're an LLC, you're not an Inc. Okay. So I'm incorporated. All right. That's why it's Ryan M. Sloan Incorporated. If you're an LLC, you need to put LLC at the end of it. You could put enterprises, there's a couple other terms, but legally it has to have a specific suffix associated with it. Okay. And again, pick out a couple of them. When you file, if they're not going to accept it, they will reject it, just like you said, and then you'll have to refile with a new one.
So the computer isn't going to help you unless you use ChatGPT, maybe.
I don't know if Chat is going to give you the list of businesses yet, but maybe it does.
Definitely
that
not ChatGPT 5.
That would be super
that one's
exciting.
A little slower than the 4th.
Man, I tell you what, technology. Centavos is going to have AI, and we're definitely going to program it to do that for you, but not yet. It's coming soon, ladies and gentlemen. So the next thing after the business name, you need a registered agent in that state. Okay. And what is a registered agent? Everybody's like, what is a registered agent? It's really the person and or organization. Okay. If you have an attorney, so on and so forth, maybe a CPA that receives your legal mail. Okay. So if someone sues you or if the state sends you some documents, they're going to send it to your registered agent. Okay. That's where you can expect to get your legal mail. Okay. So you can be your registered agent. Okay. It could be you. It could be me. It could be Ben for Ask Sloan Podcast. Or so for your business, it could be you, or you can pay for that service. There's a bunch of different options. Okay. We recommend you just be it yourself for right now.
Yeah.
Okay. Now keep in mind though, you put your address on these things and you're going to get a bunch of junk mail. Okay.
Okay.
So just watch out for that. The next thing is what's the governing authority? Okay. Is it going to be a limited liability company with managers, or is it going to be a member managed limited liability company? Like we said, go ahead and check that box that you want it to be manager managed. Then it's going to ask you, who is the governing person? Who's the manager? Okay. And that's going to be you. So you're going to put your name down and you're going to put your address. Okay. Later, as you grow this business, you can diversify the situation and you can set up a separate entity to be the manager. Okay. But we'll get into that much later episodes.
Quick question. Should you make it a permanent address, or is like, if you live in an apartment, you might move? Is that okay? Like,
I mean, this is an address you need to be solidified for mail. Okay. Because look, if you change addresses, all right, you're just not going to remember to amend it.
That's honestly happens all the time.
Yeah,
you're
you're never going to remember.
Yeah, I get mail from a bunch of people that I've never met in my life.
Right, absolutely. So, and that happens. So since you're never going to do it, so maybe go get a P.O. box. I mean, if you're real serious about this, you get your registered agent that has a permanent address, right? My firm is a registered agent for a lot of my clients. And so, we're not going anywhere. So we'll get the mail and figure that out. And we'll just throw away all the junk for you. How convenient. So you can have more than one manager. Okay. Here it lists 3, but you could have multiple ones. And then what's the initial mailing address? Again, so you got 3 addresses you're going to put on here. And then the last thing is who's the organizer, and that's going to be you as well. Okay. So just real quick as a recap, what's the name of the business? Who's going to be the registered agent? Pick a manager managed LLC. Who's going to be the manager? Then who's going to be, then what is the initial mailing address, and who is going to be the organizer? Okay. Then you're going to check the box. This document becomes effective when the document is filed by the Secretary of State. Okay. We want it effective immediately, right?
Yeah.
You're going to date it. You're going to sign it. Okay. The filing fee in the state of Texas is $300. Okay. If you file it online, use a credit card, it's going to end up somewhere around $325. If you use a firm like mine, it's going to cost you probably $1,000 to form your business. But that $1,000 is going to include some additional things. Okay. One of those things is going to be your EIN number, your employer identification number. And that's kind of where we left off at the last episode, right? We were trying to log in to the website and everything. So instead of like keeping you on hold while we tried to figure out technology, I went ahead and printed it out for us. All right.
Awesome.
And these are the things that you're going to need to know to set up your EIN. Now you can go to irs.gov. Okay. And you can click on get an EIN number, and then you click on the button apply online. And then it'll pop up this little disclaimer thing. You say, okay. And then you say, okay, start the application. And this is what you're going to need to know. Okay. The legal name of the entity. Okay. Now here's the thing. Don't get an EIN number until you've formed your business. Okay. Because if you get an EIN number for a name that you can't get, now you got to amend and do all this like stuff. So you get your LLC first, then you come back and you get your EIN number. So legal name of the entity. Okay. What's the mailing address? Of course. Then what's the name of the responsible party? That's going to be you. Again, you're the responsible party. You're going to put your social security number down. So you need to know that. It's going to ask you if you're an LLC or what kind of organization that you are, whether you're a sole proprietor, a partnership, a corporation, a church, nonprofit, estate, trust. It'll have all these options. You're going to be a limited liability company. Okay. So you're going to check that box. Then it's going to ask you, are you planning on being an S Corp? What do you think, Ben?
I'm still stuck on the significance of an EIN number, to be honest with you.
Okay. So the EIN number is the identifying number for your business. Right? Okay. So you have a social security number, right, Ben?
Yes, I do.
So that's your personal identification number. They now call it TIN. Okay. Taxpayer identification number, but that's your.
At least they got straight to the point.
Same thing, straight to the point. So the EIN is also called a TIN, taxpayer identification number, but it's for your business. Okay.
Okay.
And it stands for employer identification number, and so it's the number that you put on all of your forms with the IRS. Okay. It's also a number that you have to give the bank in order to establish a bank account. Okay. It's also the number you're going to give different vendors, depending on what industry that you're in. They're going to identify you, just like with a social security number, with your EIN number. Okay.
So do you establish credit for your business through your EIN number as well?
You will use your EIN number to establish credit for your business. That is correct. It is the number that goes with your business. So any application that you do, any form that you fill out, anything that you're doing with your business, they're going to ask you what's your EIN number.
So quick question. If I make an EIN number for my business that I wanted to establish, my business credit goes down to garbage. Can I just make a new EIN number with a new business?
With a new business. Business credit is attached to that business. So yeah, if you fail in one business, can you start another one? Absolutely.
And it doesn't affect your personal credit, does it?
Business credit does not affect your personal credit. Okay. However, there are some caveats to that. Okay. If you go out and you get a business line of credit and you personally guarantee it, then they are going to put it on your personal credit report as well as the business credit report.
So why would you personally guarantee it?
Because otherwise the bank won't give you the money.
I see. So can you potentially, guaranteed against some assets in order to get the loan from the bank?
Well, I mean, that's a great question. And we definitely need to do an episode about, raising capital. Okay. Lending being one of those things. Okay. But banks require collateral. Okay. Personal guarantee is no longer considered collateral enough to get a loan. Okay. There have been enough bad apples out there that their word was not their bond. And that personal guarantee isn't worth the paper it's written.
The handshake doesn't work anymore?
The handshake does not work anymore, ladies and gentlemen. I'm so sorry. Okay. But that's a great question, though. Yes, you're going to need some collateral if you're going to get a bank loan. And businesses really can't borrow money for the first 2 years, no matter what. So start a business today so that you can start building that credit up and eventually get to a place where you have something established.
Awesome.
Okay. So then after you choose your entity, again, it's going to ask you about an S corp. Okay. Do you want an S corp, Ben, or not?
It sounds fancy, so I'm going to say yes.
Yeah. Yes, you absolutely want an S corporation. Okay. There are few reasons why you wouldn't get an S corporation, but if you're a single member LLC, it's just you and the business, or it's you and your spouse, or it's you and a business partner. Okay. Like, we're going to have an S corporation. And the reason why is because it saves you on self-employment tax.
Interesting.
Do you know what self-employment tax is, Ben?
I'm assuming it's when you're connecting your personal credit line to the credit line of your business. And so you know that you're paying yourself and you tell the government that?
So self-employment tax, that was, kind of a strange answer, but we're going to run with it. Self-employment tax is 15.3%. Okay. That's the rate. Okay.
Oh, you're asking for the rate.
No, I'm going to get into the details of it, but first let's establish the amount. Okay. It's 15.3% of the first $150,000. It comes to a little bit over $22,000 a year. Okay. That's on top of the other ordinary income tax. Okay. So if you're a sole proprietor, you're getting crushed in self-employment taxes. Okay. It's $1,530 for every $10,000 in profit. Okay. That again doesn't include ordinary income tax. So if your ordinary tax is 20%, and that's $2,000 on every 10,000. So now you're at $3,530 for every $10,000 you make in profit for taxes. Okay. If we can eliminate that $1,530, you're saving 15%. Okay. It's huge. Okay. It's huge. It's unaffordable for when you're making less than millions of dollars. Okay. When you're only making a couple $100,000, it becomes unaffordable. I mean, it's just an extra $20,000 a year you've got to give the IRS. Now, what is it? Okay. The reason for the tax is to fund the Social Security and Medicare programs. Okay. If you are self-employed, quote unquote, and you're not paying yourself, they're forcing you to pay payroll taxes. Okay. If we were to hire people for our business, Ben, we would have to pay 7.65% in FICA and Medicare, which is Social Security and Medicare programs. Okay. Then the employee, they would have to pay an additional 7.65% out of their check. Okay. So if we paid them $10,000, they would have to reduce their check by $765, and we would have to pay an extra $765 on top of that $10,000. So it's going to cost us $10,765, and they're going to get $9,235. Okay. Instead of $10,000. Those two 765s turn into $1,530. That's $1,530. Right.
Okay.
That's what self-employment tax is. That's what it's for. How do we get out of it? S corporation.
Okay. So that's completely different than the assumption that I just made. So the lesson here is don't make assumptions. Just say no.
Absolutely. And if you're just a sole proprietor or you're a single member LLC and you are not an S corporation, you need to check on that right now, because like I said, you're getting killed in self-employment tax, and you can alleviate that just by becoming an S corp and changing the way that you pay yourself.
So would we as a business need to pay that $750 tax per employee?
Yes, you have to pay that payroll tax per employee. That's
and
correct.
then each employee needs to pay it additionally another $750.
Correct. It's shared.
Wow.
Mm-hmm.
Okay.
Yeah.
Anyway, we can just pass that through and they pay.
Well, so a lot of people are like, "Hey, I don't want payroll, right? Let me just pay contract. I'm just gonna pay you, Ben. I'm just gonna pay you contract, okay?" But what they fail to realize is that you don't have the option. Okay. An employee is either a contract employee or they're a W-2 employee based on certain criteria. There is a 20-item test. We're not going to go through that in this episode. We'll do it in another episode, but you don't have the option, guys. Depending on how you treat your employees will depend on whether or not they're contractors or whether or not they're actually W-2 employees. And if they are W-2 employees and you haven't been paying them that way, and the Department of Labor shows up, it's going to be all bad. I had a good friend and client of mine that this happened to him, and he had a $70,000 fine, and he had to pay his contractors a whole bunch of money. And then he had to he had to fix a whole bunch of stuff. It literally cost him $100,000 to deal with that problem.
So how do you determine if it's a W-2 employee or a contract?
Again, there's a 20-item test. Let me give you just a couple of them. One of them is you can't tell them when to get to work. So if you tell them that you're working from 8 to 5, they're an employee. They're not a contractor. Contractors, you don't tell them when to get to work. You tell them, hey, I got this job for you. You can tell them the job needs to be finished by this time, but you can't tell them when to show up. Another thing is, do you provide them their tools and all the things and supplies that they need to get the job done? If you do, they're employees. If you don't, they're a contractor. Another one is, do you tell them how to do the work? Did you train them and teach them? And do you have very specific guidelines on how they need to do their job? If so, they're an employee, not a contractor. Contractors are supposed to be experienced and they're supposed to be experts. They're supposed to know how to do their job. So you're paying for a result, not for production. Okay. Next, are you paying them by the hour? If you're paying them by the hour, they're an employee. They're not a contractor. Contractors get paid by the job. This job is worth $10,000. It needs to be done by next Friday.
So how does the IRS get you caught up? How do they know whether or not that employee is supposed to be a contractor or a W-2?
Well, if they audit you, if you get audited by the Department of Labor, or in Texas, we also have an agency called the TWC, Texas Workforce Commission. The number one way that you get caught is you have an employee that's a contractor that gets upset with you and he rats on you. He calls the Department of Labor and says, hey, they're not paying their employees properly. And then they come in and do an audit.
Wow. And that's just based on opinion. They have to investigate that allegation.
Yeah. Well, what happened? What happened to my client and friend was one of so he was in garage door repair. So he sent one of his guys out, and they asked him, "Hey, are you an employee or a contractor?" And they said, "We're a contractor." And it was the customer that called in on him.
Wow. What are the odds of that?
Yeah.
What a Karen customer that is.
Hey, you got to be careful out there, but you also need to be regulated. If he would have had a couple things in place, he would have passed that audit. He'd have been just fine.
Okay.
We can get into those in another episode. So you definitely want to be an S corporation. There are a couple things. They cannot be owned by companies. It can only be owned by individuals. There can only be 100 owners. You have to be a U.S. citizen. Okay. And you have to pay yourself a reasonable quote unquote salary to actually work in your business. Okay. And so instead of paying yourself $150,000, we pay you $35,000. Okay. To be the office manager. And then that satisfies that requirement, and that reduces your payroll tax / self-employment tax by 80%.
Okay. So then who gets to determine whether it's reasonable or not? I'm assuming the IRS. But
well, if you get audited and there's a question because you haven't been doing it, then yeah. And then the question is whether or not you've got a team that's going to fight that for you. But it's superlative, right? It's what's reasonable. It is an argument to be had. Okay. So as long as you're paying yourself and it seems reasonable is going to be based on your profit. If you're making $3 million in profit a year, you need to pay yourself $50,000 or so. Right. But it's still got to be like if you're just the office manager, all you do is you come in and you do the office work. You're not going to pay an office manager $150,000. That's not reasonable.
I see. So how do these CEOs get away with paying themselves so much money?
No, you're talking about C corporations, and it's a completely different animal, and they have to pay themselves that way because they're not owners of the company. Okay. If they're shareholders, then that's fine. They're shareholders, but they can't get money off their shares until they sell them. So it's just a completely different model.
I see. So this is a model particularly for small business.
This is for small businesses. Yeah, absolutely. Member managed LLC, become an S corp. The rest of the stuff that you need to know for the application of your EIN number is, are you going to be hiring people? The IRS wants to know this. If you don't know, then you put no. Okay. You never put yes in this circumstance unless for sure you're hiring people tomorrow, because the IRS could be coming after those payroll taxes as soon as you get going. So just let them know, hey, we're not thinking about hiring in the next 6 months, right? This is you. You're going to hustle. Okay. And then when you do hire, it doesn't matter. It's fine. You're going to get a payroll company and you're going to do all that properly. And by all means, we'll talk about payroll in some other episode. So why are you applying for this business? The reason you're applying for the EIN is to start a new business. That's the first one. There's other answers like banking purpose, and you change your type of organization, or you hired some employees, so on and so forth. But the number one reason, and the reason why you're going to do it, is to start a new business. So you just check that box. Okay. Then you're going to want to know what industry are you in? Are you in healthcare and social assistance? Are you a wholesaler? Are you in construction, rental and leasing, transportation, warehousing, real estate, manufacturing, finance and insurance, or other? You want to try to pick one of those sections, okay? Because if you pick other, sometimes they won't give you the EIN number right away because they don't know what you're doing, okay? If you do pick other, you specify, hey, I'm in consulting.
Okay.
But don't just put consulting, put what type of consulting. I'm in sales consulting. I'm in administrative consulting. I'm in financial consulting. Like, be as specific as possible so that they will approve your application. After that, it's going to ask you some questions like, do you sell guns? Do you sell tobacco? Like, there's some stuff that they really want to know because those things are federally regulated and they want to make sure to identify you in the system that that's what you're doing. But that's what you need to do to set up your business. The last piece of this puzzle is an operating agreement. Okay. And if it's just you, a single member LLC, you can get a simple operating agreement off of LegalZoom or Rocket Lawyer or something like that. If you want something a little bit more robust, hire an attorney to make that happen for you. The operating agreement outlines how the LLC is going to operate, who the members are, who the managers are, and what are all the terms and conditions of those relationships.
Okay. So at what point do you decide it is now the time for me to get my EIN number to establish my LLC?
As soon as you start selling.
Okay.
Like, if you're serious about your business, you need to form it immediately.
Okay.
If you're not an S Corp and you just start making money, okay, your deposits are considered sales. So if the IRS audits you and you got a bunch of deposits that are sales and you don't have an S corporation, you're going to get hit with self-employment tax. You're going to get hit with failure to file, failure to pay. You're going to get hit with all of this stuff because you didn't have your ducks in a row. You need to start your business as soon as you're ready to start selling.
Okay. So even before that, what should you do? Like when you're starting your business from scratch and you don't necessarily know whether it's going to be a success or not. So you're kind of on the edge of, being scared whether or not you should begin. But you also need investment. So like, where should you start?
Well, I mean, if you need investment, if you need like investors and things like that last thing that you said there, man, you have to have a formation. You have to have a business. Investors not just going to invest in something that's not an entity, something that is not a vehicle that they can put their money in. Okay. You need a bank account in order to receive funds, things like that. If you put all that stuff in your personal, then you're creating a mess. Okay. And you're creating a mess that some accountant, CPA, or attorney is going to have to clean up later. And the mess is going to cost you a whole lot more money. Okay. So the first thing is, if you really want to get into business, you need to pull your bridges up. You need to understand business costs money. It takes money to make money. Okay. Yeah. So yeah, if you've got nothing, then go out and hustle and sell a little bit and get your formation together. Okay. Like I said, it's $300 to file the LLC. Okay. It's free to file the EIN. I mean, you can start a business all by yourself for less than $500. Okay. You don't necessarily need that operating agreement right away if you're a single member LLC, but if you've got a partner, I highly recommend getting an operating agreement, and those can run you anywhere from probably $500 to $5,000, depending on how robust they are and what attorney you hire to do it, or whether you get it from LegalZoom, so on and so forth.
So last question, because we're coming up on time, but along with that $300, is there any other expense that you need to worry about that might need to be paid, monthly, yearly, or anything like that?
No, just to form your business,
Okay.
You're talking about the filing fee for your state. In Texas, is $300. If you do it through like Delaware and you go to Harvard Business Services, It's probably somewhere like $500. Okay. It's not a ton of money. It's less than $500 per state. Okay. But if you go hire somebody to do it, it's going to cost you more, but they're going to put everything in the package. Okay. They're going to give you the formation, the EIN, the operating agreement, everything. So you go get a package price. I definitely recommend that. And if you have a partner, make sure you've got an operating agreement that everything's on pays, that you understand. Like, I'm 51, you're 49. We understand that. Okay. There's no question. As money comes in, that's how we're going to split it. Right.
Yeah.
So yeah, that really, just get it started, go get your bank account, and then start selling as soon as possible. I mean, business is about making money. So go out there and do it.
Absolutely. And that essentially wraps it up for our episode.
Well, let's give them that last tip, right? You want to be an S corporation. If you're a single member LLC, if you're a sole proprietor and you are not an S corporation, you're getting killed in self-employment tax. Stop paying that money. It's not necessary. Go get yourself an S corp as soon as possible. Comment below. We'll guide you in the right direction.